15 March 2023 Wednesday MAO with Kel, guys. This is going to be a very important video because I'm going to cover so much stuff, okay, that you're probably going to be like mind blown by the end of it. I think this is really my longest research ever. Took me nearly 6.5 hours to collect every single data to share with you today. Now, the most accurate financial indicator, probably you will say this and that, right? I'll tell you it's M2's money supply. Why? Because by the last 100 years, okay, this M2 has been going up relentlessly, which means that basically this indicator has never came down. And apparently it has just happened for 2 consecutive months, and that is the reason why the banks are having big trouble right now. So this is a must-watch video. Let's go with it. Alright, now first of all, I'll thank people who joined me this afternoon for lunch. We have a very good lunch at Bugis Junction. Alright, here, this is a very nice place. The food was excellent. The companionship was incredible. And of course, we understand that KK Chong, you are in KL right now, so you can't join us for lunch. Don't worry. I'll drop you a message. Next time, if we go to KL, you take care of us, okay? If you come to Singapore, claim your lunch from us. Alright. Okay. And also, last night, you guys have posted your CPI data, and of course, Willie Lau, you got it spot on, 6.0. So because of that, you are invited to the next lunch, which is 2 weeks from now. Right, you don't need to participate in the spin the wheel, you're automatically go in. Alright, just like the golden buzzer like that. Okay? Alright. Next Wednesday, the week after next, okay? We are going on the 29th of March, right? We're going for something very different. We're going for Indonesian food. Yay! Sharif, you can join us right now, okay? Make your time free for this. Now, it's at this Tambuan Mas. I think it's called Top Up, right? Okay, alright. So the thing is this, I saw the rating here is up. The food is excellent. It's at Paragon Shopping Center, so it should be quite decent, yeah? And the rating was, wow, 4.5 stars in Google, rating for some 780 reviews. That means it's really good, okay? So we're going for this. So how you get this chance, right, is from today until next week, okay? Every day, as long as you leave a comment on the video, what you hear today. Alright, leave a comment. As long as it's a valid comment, we'll put it in as part of the name for this very nice lunch happening on 29th of March, Wednesday, okay? Normally our lunchtime will be at 12:30 and we'll finish by about 2:30, okay? Alright guys, hope that you will come in and join this. This looks very, very good, yeah? Okay, put it aside. Now let's go to a serious note, okay? Do make sure you do our risk assessment because things are going to be very scary and we can actually see a potential black swan coming in. Now, basically, this coming Saturday, I have my preview. I share with you guys. I'm going to be covering a lot of stuff. It's on this coming Saturday at 9:30 to 11:30 a.m. And I'm going to have a very powerful offer for people to join us, okay? So that basically it's alright. I make things easier for you so they can join us. So we have now limit to 120 packs. We have 93 people have signed up. Thank you so much, guys. So we will be looking at how low the Dow could possibly go. We're looking at when's the time to buy gold and crude oil. And very important, when can we go for long in the market? So this is going to be the information that I want you to get by the end of the day, and of course, most important, to join our TWB community, our batch number 20th. Okay. Now, what happened last night? Wow, what a strong rally. Now, last night, I already tell you guys the Dow will go up. I already informed you guys, and it really, really happened. The Dow went up by 336 points, Nasdaq up by 276 points, S&P itself up by 63 points. And of course, we talked about Wells Fargo yesterday. And today, Wells Fargo rebounded 4.58%. What a rebound. But you notice that, right? It was down by 4% yesterday and up by, the day before, and now it's up by 4%. It's like basically algorithm, right? So to me itself, this is not good. Because when you have market behaving like this, basically it's like more like an exercise being involved. It could be a real dump and pump, or a pump and dump. And I think that the latter most likely is happening right now. So of course the Dow basically snapped a 5-day losing streak because we all know that Dow can't be down perpetually, right? So after 5 days of downside, we already say most likely the market will rebound. And in fact, tell you guys a bank share rebound. You can see the bank shares, most of them, if not all of them, rebounded, yeah? So this is very important to listen to MAO. Okay. So the thing is this, we all know that now the so-called investors are getting a little bit feeling that the risk of contagion is actually mellowing down. right? Because now we know that Silicon Valley Bank, Signature Bank has been contained, and Federal Reserve, FDIC is coming in to save the day. So all the backstop on all the depositors will be done. But the question is this: how much can you go? What if these are all the smaller banks, right? Number 16 and number 19, if I'm not wrong. If the banks are bigger, then would there be a backstop? So we all know that yesterday the SPDR S&P Regional Banking ETF rebounded, okay? And of course, we also saw that First Republic Bank also recovered 27%. But you must understand this: this bank itself gapped up more than 27%, and it was sold down. Still, overall it's up, but it is because of this so-called backstop. So to me, this is more like a pump to dump so that people may not see it. But for those who are professional, they will know that this is not something usual. And of course, we also know that yesterday we had the US inflation data where the consumer price index rose at 0.4%, the annual was 6%. So it was pretty in line, almost perfect, right? In fact, perfect, okay? The thing is this: why so perfect? Well, I think obviously we need to adjust a number to make it perfect. Why it's so difficult? So I'll tell you more, and I feel that there's more than meet the eye again. So the S&P 500, as you can see, let's just take a look at the chart. Okay, this is going to be very important information. Let's take a look. The S&P 500 gap up first. Okay, it just gap up because of the good news. Then after that, it went all the way up, right, because of all the backstop and stuff like that. So this looked good. Then suddenly we have the share market coming down. Wow, look at it. It tumbled all the way and it almost basically covered the gap. Okay, so that means that there's weakness in the market. But what causes it, right? Well, apparently this is the reason. Apparently, right, there is this what they call something happened here where Russian downing of US drone, okay, marked escalation of frontation near the war zone. Okay, so again, this is the US Russia thingy, and of course that causes, or one of the catalysts that brought the market down, sorry. But the thing is this: then after, towards the last 45 minutes, you take a look, suddenly huge volume came in. So guys, after such a thing happened, right, who will come in the last 45 minutes to pump the market? Well, I think your answer and mine is the same. We have the plunge protection team, okay? Now, this team is supposed to be working for the White House and the government, and that is the reason why, because they don't want to, like, let the people feel that it was a war issue that causes it, because America usually doesn't allow that happen, yep. So I don't know what happened, why people buy up, but I can say is this: if the case is true, the market has to stay up, because if the market pulls back below 38.80, okay, I suspect that the selling will be drastic, okay? So yesterday during my MAO, I was very clear that I believe the bank share will recover. In fact, itself, I checked the KBW, I saw the RSI was at very low end, and with everybody calling for sell, you know, when everybody call for sell, you just have to look out for a buy signal. And truth be told, it really happened. So in case you missed my video, this is the highlight. So do I expect a rebound very soon? Yes, indeed. Well, based on what I'm seeing right now, right, we should be having a rebound from the bank share on pure technical, but in the long haul, I believe that we'll see 69. And right, so you heard me, I already said that there will be a rebound, even though I'm still bearish, but it will be a rebound because it's pure on technical. But still, end of the day, I'm still looking at 69, and that is very clear on my side here. Okay, hope you make money, because we did. All right, the thing is this right now. Why I talk about the First Republic Bank, right? You see the share price, okay, it's still up by 27%, right? Correct. But it's because it gapped up. But look at it, it was so much higher during the day. By the end of the day, right, with the Dow going up by 300 points, Nasdaq 200 points, the share actually came off. So again, this speaks volume that now it's more like the boys purposely buy at the low, gap it up, and then retailer think that everything is safe, jump back in again the market, and the boys dump to them. And this is the scary part. When the entity like banks, I mean, these big boys start to do the pump and dump exercise, right, I can tell you this is going to be very bad. Because Moody's has cut the outlook of US banking system to negative, and citing that it's rapidly deteriorating operating environment. So if Moody's is doing that, you can understand why would people be buying the bank shares. And the thing is this, we are only at the second half of the table. We haven't got to the top 10 table. So if anything happens in the top 10, I can tell you this, things get very scary. And that's the reason why now people from extreme fear has moved to fear now, because they feel that things are getting better. I don't think so, guys. This is going to get worse, okay? So, of course, virtual half away, right? Remember, they cut away US Bank Corp more than half since last year. Yeah, last year they've been dumping. And of course, everybody basically asked, why are they dumping? But now it seems that they are the smart people. They dump it at the right time. They even dump more in February, dumping the bank, dumping in TSMC, and stuff like that. And of course, were they right? They were spot on. So is it because Warren Buffett has some news? Well, I don't know about this. But still, if he have, then he would know that he had just lost $8 billion recently. Why? Because $6.6 billion was lost on the wipeout, like the way from Bank of America and American Express. But of course, you know Warren Buffett, he won't sell shares just like that, right? So undeniable, he sold them at a good price for the Banco and other banks. That means that he still had the vision. Whether he has some tips or not, I don't know. But still, he got it correct, yeah? But still, he's still down $8 billion. Okay, the thing is this. I am going to put my stronghold right now. I believe that Credit Suisse will see $2. Huh? $2? Yes. I've been calling for sell on this counter since it was $6, $5, $4, $3, and still believe you're going to see $2. The thing is this, Credit Suisse just came out and said they found some material weakness. Oh my God, what a way to be creative with just a reporting, my God. Meaning, in short itself, there's some problem in their accounting, okay? So, the thing is this, people are speculating that whether the bank will get state assistance. Apparently, the chairman say, nope, it's not the topic at all. Okay, I'll leave it there, but I know that what will happen very soon, yeah? Because you can see I'm very, very vocal, right? 12 days ago, I already tell you that Credit Suisse will be in trouble, and of course I tell you that the credit default swap is actually increasing, and of course, what am I referring to? I'm referring to Credit Suisse itself, okay? Because now, take a look at Credit Suisse. This is Credit Suisse share. The share price was was nearly about, I think that was nearly $80, nearly there. And from $80 in 2008, that is a Lehman Brothers time, is down, all the way to now historical low, guys. This is crazy. So now the closing price was $251, down by 17% for the entire 3-month cycle. And look at the huge volume. All right, the volume is thick. Now, when share price is coming down and volume is thick, right, it's only meaning that a lot of people are getting out. But the question is, who's going in? That's the question. So to me, it's all right. We're now at $251, and I still believe that we'll see $2. Okay, why am I so adamant on this? Because I just saw the CDS of Credit Suisse. Take a look. The CDS on Credit Suisse right now is at 446. Mind you, just last year, it's all right, it was at 50. Now it's at 446. It's 9 times, in fact, higher than the last time. So what is happening right now? Why? Because the cost of insuring Credit Suisse is going up because people are feeling it, and people are getting very worried. In fact, it's all right. It's credit default swap. It's a financial swap agreement that the seller of the CDS will compensate the buyer in the event of a debt default or credit event. So which means that if there's going to be anything happen to Credit Suisse, okay, those people who are doing the CDS right now must pay. And of course, the last time in 2008, people who wrote the CDS got hit very badly when the market collapsed, okay? So that is a very, very important, because the last time when we see Lehman Brothers, the highest one was only 250, and this time around is really 446. It's higher than the last time, almost by 100%. Guys, are you telling me that there's nothing going to happen? Well, if it could be, if nothing happened itself, right, then of course this CDS, those guys who wrote it will be making a lot of money because they get the premium first. But you think about this. Do you think so? I don't think so, guys. So to me, it's all right. Let's understand what happened in last night's CPI data first. Okay. Yes, indeed, the CPI data is 6%. Okay, that is confirmed, that is clear. But the thing is, we all don't see it in the way that what I see it. Now, the thing is this. Look at it. Now, the CPI data is 6.0, right? Okay. But if you look carefully, it's all right. Look at food. It's up by 9.5. If you look at energy, it's up by 5.2. Look at the item less food and energy is 5.5. A lot of people are just telling that the CPI data is good, so let's us focus on that. But to me, it's all right. I really like to dig things really deep. And I tell you, something is very wrong. Look at it carefully, guys. Now, you look carefully now. The thing is this. We have the increment. The PCE data itself is 5.5, but you look carefully, it's actually rising up. This is not a joking matter. That means that, right, it's not going along with what Federal Reserve is saying. And the thing is this, you look even clearer and deeper, you will notice that all the food, energy, all right, all of them are mounting up. The only thing that is contracting it is actually the used car, all right, that's actually going down, and of course the air travel and stuff like that. So the question is this, okay? food and energy are important thing, and if let's say we have this unemployment coming in, and these two areas are still going up as well, right? Who the care? Who the hell will use the used car? I mean, seriously, you have to understand this. Who will want to drive? They'll take the public transport then. So to me itself, right, it's inaccurate, and that means something is very wrong here as well. Because now the Americans are feeling it. The Americans feel that now this is really very difficult to live in. Alright, a lot of more middle class are struggling. They are not able to pay their bills, and they think that the inflation is going to cause them a great problem. And if you're going to go higher, gosh, you cannot imagine what will happen. So even not only in US, in Singapore, we can see that now the retrenchment is more than double of fourth quarter, and of course they tell you this BS that is because business restructuring. Come on, man, this is rubbish. All right, and of course you can see right now, right, the rental in Singapore is surging fast. Think about this, it was just 2.2k for some people, and now it's 3.9k. Oh my goodness. I have friends basically stay in certain places in Singapore. He paid for 3.8k for a family unit, and now he had to pay $6,000. Oh my goodness. And he told him, if you don't get it done, they'll move out. They have to move out because there are people who really, really want it, and they don't mind paying for it. Oh my goodness. All this is happening, guys. I've been informing you that Singapore and everyone here will get hit, and unemployment will go up. At the time itself, when I was saying this, many people think I'm crazy, but look again, Meta has going to lay off another 10,000. It's not the last one, no, another 10,000 in the second round of job cuts. Of course, the share price went up because now less people to feed, right? But the thing is all these people now, they're going to leave their job, right? They will actually constitute to the unemployment data. And of course, when that all happened itself, right, you can imagine what will happen to the entire equity market. So Lockheed Martin is going to cut 176, and Hunter Douglas 361, and Alassian, wow, they're cutting about 5% of their staff. So all these going to be counting in, and I think by April or March latest, April or May latest, we're going to see a very incredible unemployment data. So you can see right now, right, the unemployment data is still at the low end because it's not really moving yet. But you can see every time when the interest rate goes up, right, you notice that the unemployment data very interestingly go down. But the thing is once the Federal Reserve start to hold the rate, you can see that that's where the market will bottom out. And now when they start to cut rate, right, for some reason, wow, look at it, the unemployment data shot up. So to me, it's all right. The unemployment data will be going up again in Singapore, and I believe that this is going to happen very, very soon. I've been saying that August 2023 should be the the start of the global recession. Yeah, I'm going to put that once again. I believe that August 2023 we will see recession in US. And of course, things can get very bad as the stock market could really, really plunge. All right. So once again, guys, this is my view of the market. Of course, it can be wrong, can be right. I'll leave it there. So the Senate now is trying to urge Federal Reserve to really focus on jobs, because if you keep on raising interest rate, that means that people lose their job, right? Of course, you see it from Meta and the rest. But the thing is, according to the people, the Senate is saying that for the working Americans who are already feeling the crush of the inflation, job losses will make it even worse. We can't risk the livelihood of millions of Americans who can't afford it, okay? I ask that you don't forget your responsibility to promote maximum employment, and the decision you make at the next FOMC reflect the commitment to the dual mandate. So in short now, Jerome Powell's arm is being twisted because he knows that he needs to increase interest rates so that it will basically curb inflation, which is seemingly happening. But the thing is this, if you do that yourself, right, that means that the market will be very, very concerned. So now we have a problem here. What can he do? What should he do, right? Take a look. Now this is the latest number, and seemingly the market is looking at a 25 basis point, while the rest remaining as a pause. So the question is this, I took it from Steve Henrich, right? You see this. Inside Jerome Powell's brain, if I raise by 50 basis point, I will signal that I'll blow up everything, that's for sure. If I raise by 25 basis point, I may still blow up things. Of course, that means that you're not doing it fast enough. If I don't raise interest rate, I'll lose credibility. Of course, everybody expect them to follow what they say. So the thing is this, if they cut interest rate, I tell you, things will still blow up. Because why? That means fear will come in immediately. So what do you think he will do? Write a comment right now. Do you think he will raise by 50 basis point, 25 basis point, don't raise, or cut? All right. put your answers in and please provide your reason for that. If you say cut, why? If you say don't raise, why? If you raise by 25, why? And so forth, okay? Alright, put it into the comment box right now. Now, Michael Burry changes his mind? No, apparently this is going around. Apparently there is this thing say that Michael Burry is no longer seeing true danger. What? My God, why he changed that? Nah, guys, don't listen to the media. Just like how Mike Wilson said, there could be a recovery to 4150 for S&P 500 before coming down, and the market quoted is that Mike Wilson changes his view. So this is terrible, right? Don't worry, I actually saw this. What did he say? Guys, take a look. Now, apparently, Michael Burry came in Twitter, as usual, he put in and delete. This crisis could resolve very quickly. I'm not seeing true danger here. Now, of course, at one read, right, you say that, hey, Michael Burry has turned positive, turned bullish. But you ask me, knowing him that well in a way, I think he's being pure sarcastic, okay? Very sarcastic, like how this Yellen is doing, and how Warren Buffett is, how Jerome Powell is doing. And of course, did I put my comment there? Of course I did. Look at it. In fact, it's very early in the morning. I already spotted this quote. I put there, sarcasm at its best. Okay, it's very clear that this Michael Burry is just basically being sarcastic here. But of course, again, some say no. He's actually feeling it right now. He's going to be a better person. Okay, I'll leave it there. Okay. Now, why do I say that we're going to be in some serious trouble, guys? Because M2, okay? Look at M2. M2 since the start all the way has not really dipped before, okay? And of course, it went all the way up here itself. But the problem is this, do you see now? It's actually coming down. So think about this. While the thing is going up, we still have recession. So imagine that if the thing is, it doesn't, alright, if the thing that if it really have to come down and you need a break, then how deep and how big will this recession be? So this is very concerning right now, because we have seen this before, that usually it's alright. Once the yield start to go up again, the stock market will come down. It's been proven again and again. So that's why, guys, you really must consider to do that, because it's never helpful and things may get backfire. So the thing is right now, right, we all know that the M2 is coming down right now. So what's the impact of this? Well, apparently, right, this is the M2, and actually the numbers are coming down, and you can see very clearly right now that this is a long term indicator. And of course, if you look at the wordings, let's take a look here. M2 is a measure of money supply that includes cash, checking deposit, and non-cash asset that can be easily convertible to cash. So now if the numbers are coming down, right, that means that people are drawing from the system, and things can get very fast, get very dirty. And of course, if you get into worse, if you do some creative accounting, yeah. And you can see right now, oops, okay, there's some technical issue. Right, in the latest report, right, the M2 money supply shrank by 1.3% and 1.7% in January. That means it's been shrinking the last 2 months, and that's why I was very concerned. And the thing is this has never happened before. No one has seen it before, right? So no one knows what's the effect of this, even though the gut feeling tells people that it's going to be a deflationary and lesser money chasing a similar amount will be good, and so this means that no price pressure. So to me, it's very simple, guys. We have never seen M2 coming down, and you see it now live on. And if everything goes according to plan, that means that the banks will have enough money to run, and of course they can use the so-called depositor money to just deal with it. But I can tell you guys, they'll likely store it somewhere because they know that this is going to be very bad. So all this information tells me that we're going to see major selling very soon, and once the market realizes that the thing is that it's happened like this, so I'm pretty sure a lot of people will have to think twice to profit from here right now, doing the wrong thing. Yep. Okay. So you can see now, right, a friend of mine actually shared this with me. When the money supply contracts goes down, yeah, bank will start collapsing. This trend is very predictable. Every time the money supply has contracted a bit in the last 150 years, we have a banking crisis. So now the money manager now is down, M2 money is down by 2%. So think about this, what will happen, what will really happen right now. I cannot imagine this. Alright guys, this is why I say this is the most important, most powerful indicator, because it actually tells you that something is very wrong. So when the market recover and rally, do take the opportunity to short instead. Yeah, you don't want to be long on the wrong side. That will be terrible. Yeah. Okay, let me just find my screen here. A bit of issue here at the moment. Okay. Alright, so that will be end for today's video. You can see that it's so impactful, very important stuff. I'll see you on the technical side. This is Kel signing off. Thank you. Please like it and share. Bye-bye.